Hello everybody. I hope you are fine wherever you are. I am the Acca tutor, Mr. Jem Timkulu from Transcal Consulting Services. I teach ACCA modules, almost every module, yes, with the exception of a few, but we also have at Transcal Consulting Services tutors who can teach those modules. So if you become our student, you're not going to be left behind. Everything is going to be sorted. I am also a registered mentor for the Acca Oxford Brookes BSc Honours in Applied Accounting degree, which means if you have opted to start the Acca qualification with us, you're going to enjoy a one-stop shop where you can get all the services you want. All right. Let me just emphasize or explain what we mean by the Acca Oxford Brookes BSc in Applied Accounting. This is an accounting degree from a UK United Kingdom university. Okay, let me just say Acca OBU BSc. Okay, degree is from a UK university. Okay, how do you obtain this? You just have to complete your FA. Okay, complete your FA plus 9 Acca modules. All right. If you complete your FA and then your 9 Acca modules, you're going to just have to do research project, and you get your degree. All right, so we just have to raise with time. If you are very serious and committed to your studies, it means that in just 2.5 years or 2 years you can get your degree. Okay, much of that, let us start our business of the day. All right, in this week number 6, we're going to do a topic which deals with authorizing, making and recording of payments, and the maintenance of pet cash records. That's the business of the day. Okay, why do we have to worry about authorization in the payment system? All right, there are a lot of risks which are attached to cash. Okay, cash can be stolen, cash can be misappropriated, by fraudsters. Okay, cash can be subject to error, in accountability. All right, so we need to have a lot of controls, strong controls over cash. All right, cash again can be paid to wrong persons. Okay, can be paid to wrong persons. Cash can be paid for wrong reasons. okay, or purposes. So there is a risk that if we are not careful, we end up doing the wrong things. So as you can see here, there is a lot of worry when it comes to the custody of cash, to the utilization of cash. All right, for today, we just want to, to talk much on the payment side. All right, because by the end of the day, the system, the cash system, should have an objective that whatever payment that is going to be made, it should be made for the right reasons, to the right people, in the right quantity. Okay, because if you do not count it properly, you might end up paying more or paying less. All right, if you pay more, it means that the business is losing out in terms of its cash balances. All right, but if you pay less, that might annoy your suppliers. All right, that might annoy your suppliers because they do not want to deal with somebody who can't pay them their right amounts. Okay, now what are the controls available over cash payments? Okay, over payments. It is very important to apply controls over payments. What do we have to do? There should be some documentation, all right, available before you pay. All right, for example, there should be a supplier invoice, all right, or some statement from the supplier that we are owing so much, so we have to pay. There should be some check request form which has been completed so that we start to process a check. Then there should be some expense claim form. Okay, maybe some employee has paid money. Okay, if he has paid money using his own money, he also needs to complete some expense claim form. Okay, so that he can be reimbursed. Without such forms, we cannot process any payment. Also, even if when we want to buy something, all right, there should be some order to pay voucher or some expense claim form that we want to make some payment. We want something, we want to buy staplers, we want to buy some stationery. So there should be some claim form which has to be completed. All right, but usually in those circumstances, we normally do what is called some requisition. Okay, there is need for some requisition to be paid. To be prepared. Okay, some purchase requisition which is to be completed. All right, but normally the expense claim form is usually used to reimburse somebody who has incurred an expense. All right, now we also have to have some authorization process which should be observed. Authorization of the expenditure item. All right, before the accountants or the accounts clerk starts to process the payment, there should be some proof that such a payment has been authorized or such an expenditure has been authorized. Then we need to see authorized signatures on the checks to be paid. Okay, because not everyone in the company should have the powers to sign a check. Okay, so there should be some top brass or individuals at strategic level who should be who should have the powers to authorize or to sign on the checks for them to be processed by the bank. Now, how do we have to apply those controls? The first step is to obtain documentary evidence, okay, of the reason why the payment is made and the amount of the payment. All right. In the case of payment to suppliers, the documentary evidence will be a supplier's invoice or the supplier's statement. All right. Step number 2, authorization of the payment. This begins, which means giving formal official approval to make the payment. Okay. So before the payment has been done, there should be some proof of authorization. Then, restricting the authority to actually make the payment, we talked of the signatories. There should be some signatories within a company who have got the power to sign the checks, okay, or to sign on the withdrawal slips which are sent to the banks. All right. Even if when the company might be using some online banking system, because these days, because of technology, there's now what is called online banking. These signatories are also there. They would have to authorize a transaction. All right. They will have to authorize by entering into the system and do the final authorization of the actual payment itself. There should be the authorization in terms of the initial process, okay, where the purchase vouchers, they are signed, okay, the paperwork has to be authorized, all right, that's the first authorization process, and then the actual payment should also be authorized in the system, where they will be verifying the figures before they do the final authorization. Okay. Now, more on the authorization. It is important to establish proper authorization procedures with each person in authority having written limits. Every payment must be approved by an authorized person. This person will often be a manager or supervisor in the department that initiated the expense, but every organization has its own system. For example, which individuals can authorize particular expenses. You discover that supervisors of a department would be having some threshold up to which they are allowed to authorize certain payments. But then after that, you discover that maybe the departmental heads would be required. And then from there, it might go to the manager, the branch manager, or the directors. Okay, so in certain individuals would have some authority over particular expenses. All right, the maximum amount of expenditure that an individual can authorize, an individual per se would also be authorized to, to have some certain limits which he could give authority of processing without further consultation. Right. So this is actually very important, so that the risk of having fraudsters tampering with the system is minimized. Okay. Now, there are various forms of payment processing. All right. We've got the check requisition forms. These are used when primary documentation such as an invoice has not been received. Check requisition forms help to ensure authorization and recording of payments. A check requisition form is simply a form requesting that a check should be drawn to make a payment. Ladies and gentlemen, you know, these forms are actually rich examples. They are rich examples. Because examiners have realized that most of the students who would want to become professional accountants need to be exposed to the professional environment itself. All right, you will discover that if you do accounting, if you start and quickly get into the industrial environment or the or work in general, if you start working, these examinations become easier for you because you'll be exposed to the documentation. And the examiners, they also want you to show that level of maturity, because when you go to the companies, they expect you to show some real life experience. All right, so you need to be exposed to the to the forms which are used in business, the business documentation and everything. All right, so in this particular process where we would want to to have a check being written, we also need to see some original documentation. All right, and this should be in the form of a check requisition, because this is where you get the authority to then write a check which should be sent to the bank. So it also forms part of the audit track. The audit track, because in the near future, when auditors come, they would also want to find the track of the documentation. We do not want to find a situation where a check was written but there was no basis, there was no documentation for authority. That would become a challenge. All right, there is also what is called the expense claim forms. We have talked about these ones. Expense paid by an employee for which the employee wants reimbursement should be itemized on an expense claim form. Okay, in many organizations, employees will make payments out of their pocket for items of business expense and then claim back the money from the organization. Expenses for which payments might be claimed include the following: money spent by the employee on business travel, the cost of newspapers or magazines that employee buys for business use, part or all of the employee's domestic telephone bill, petrol, car service, and repair bills for carbon cars. All these should be reimbursed based on a completed expenses claim form. Now, let's go into the recording of payments. Now, there are several controls for the recording of payments. Controls of recording payments are important to avoid fraud and to ensure completeness. The bank reconciliation is the most important control. The bank reconciliation, because it gives us assurance on the recording of payments. But I will talk much about this in the coming week. Okay, we'll be talking about bank reconciliation. The following procedures are therefore necessary for payment controls. All payments are authorized correctly. Proper checks are made against supporting documentation. Okay, you also have, even if it is a supplier's invoice, you need to check if it is a genuine invoice from the particular supplier. Sometimes it is very important to make a follow-up with a phone call, okay, to the company to see and to get all the necessary facts required before you make a payment. All right. So you can also check the amounts, check the type of item which is being bought, and also to verify if the amount is actually fair. Okay, although most of the processes would have been done, that include the issue of taking quotations and everything would have been done. Okay, but it is also prudent usually to determine if the item has been received before you make the payment, because usually invoices from suppliers come later after the items have been delivered. You also have to to verify if the item which we are paying for has been delivered, and you confirm from the receiving department. And also with the goods received notes, which would have also been sent to you from those departments. Okay, you might also have to check with the purchases order. Okay, the copy of the purchases order, which would have been also sent to the supplier to verify if the invoice amount is what is on the purchases order. Now, the person who writes out the checks is not the person who records the payment in the cash book or remittance list. There should be some segregation of duties. Not every person should do everything in the process. Okay? Then, at the end of each day, a list of the payments for that day is submitted to a senior member of staff to check for unusual payments. He or she will investigate all payments which are unusual. Okay, let's say for example, the payment would have been, let's say, $20, $15, $13, $19, and then another one, $107, then another one, $22. Obviously, this one is actually unusual, all right, because the business would have an average of these amounts. Okay, these are normal amounts, but when we start to see a customer, a supplier being paid $107, then this should actually be verified or investigated. A minimum number of checkbooks is in use at any time, preferably one. At least one checkbook should be in use. Okay, not a proliferation of these books. We do not want such a situation. Okay, we'll be having a lot of books in use at a particular time. That might create a loophole for fraudsters to manipulate the system. All right. What about completeness? It is necessary to ensure that all payments have been recorded. Nothing should be left behind. Every payment the business has made should be recorded. Okay? Do not leave out things, whether they are immaterial or material. Everything should be recorded. Once again, if a payment has not been recorded by accident, then this will become apparent when a bank reconciliation takes place. We'll talk about this in the coming week. Now, let's talk of the entries in a cash book. All right. Here we are not interested in completing the cash book per se. Okay, that's not our area of focus today. All right, because we have already covered the issues to do with how to record entries in the cash book. If you missed those ones, then you need to go back to the videos in the previous weeks. Okay, for previous weeks. All right, so here we are only concerned with the information we would like to see in the cash book payment side. Okay, for example, right, let me just try to say to come up with a table like type of payment. Okay, type of payment, and then how do we treat this in the cash book. So we are only interested in the theoretical aspects, not the accounting aspect. Okay, so we might have we might find cash purchases being recorded. Okay, cash purchases will be recorded. All right. When we are saying cash purchases, we are simply saying those payment transactions we would have made by cash. Okay, would have made those payment transactions by cash for the procurement of goods for resale. Okay, goods for resale. All right, we might have an analyzed cash book, right, which would detail everything. So on the credit side, these should be included on the credit side of the cash book. All right, and usually we would want a situation where the columns for cash purchases are analyzed. We talked about the analyzed cash book some time ago by type of purchase. Okay, by type of purchase, whether it was for the purchase of let's say goods for resale, okay, for the purchase of goods for resale, or for an item of office use, for example, stationery, etc. We need to know so that we know how to account for those purchases, because if they are purchases for goods to be used by the business, not for resale, they should be accounted for as expenses. Okay, they would be accounted for as expenses. All right, but if they are for goods for resale, then they should be accounted for as stock. So that they're very different. There will be different types of purchases. So we need to, in the analyzed cash book, the purchases, their type, the type of the purchases should be explained clearly or in detail. All right. Now there's also payments to payables. Payments to payables. Okay, so payments to payables, these ones are not analyzed, but included in a single column in the cash book. All right. Why is it so? Because the analysis would have been done in the purchases day book. Okay, when we originally procured the items, that's when we would have done all the required analysis. Okay, remember the purchase day book is for credit purchases. All right, so that's where the payables emanated from. Okay, they emanate from the purchases day book, because that's the book of original entry where all the credit purchases were recorded. Now we also have to find items of sales tax, sales tax information, but only for cash purchases, because remember the cash book is also a book of original entry. So when we make cash purchases, that's where we start to record the transaction in the cash book right away. Okay, we do not have another book which is going to record that transaction, so we record the cash purchases, not for credit purchases, because the credit purchases, everything about those transactions would have been recorded in the purchases daybook, including the sales tax issues or amounts. Okay, so the input tax for the purchases, for cash purchases, should be included. All right, that is it. So only for cash purchases. All right, what about cancelled checks? Cancelled checks. These should be recorded in the cash book, even if not used. Okay, why do we have to do this? For sequential checks. Okay, for sequential checks, remember, checks are serial numbered sequentially. Okay, they are sequentially serial numbered. So for the purpose of tracking our checks, I mean our check history, then we need to ensure that in the cash book there are serial numbers. I mean, the serial numbers for the checks are in sequential order. All right, they should be in sequential order for the purpose of checking. All right, there are also non-cash, I mean non-check payments which are found. They are also found in the cash book. An example of non-cash payments, non-check payments, is a standing order, okay, or direct debits. Okay, these ones, standing order or direct debit, these ones, they're also payments, okay, which should be recorded in the cash book. So we expect you to have those entries reflecting those transactions. All right, so they usually are recorded at the end of the month. Okay, they're usually recorded at the end of the month because usually that information is reconciled, I mean, is obtained from the bank statement itself. Okay, which normally companies, they collect those bank statements at the end of the month. Okay, but you can update whatever entry from whatever deduction or payment from a standing order or direct debit on a daily basis, depending on your banking arrangements with your banker. Okay, so that information should also be reflected in your cash book. However, let me just write this statement. However, we do have to check the validity of these deductions or payments, okay, against a control list When we are talking of a control list, this is a list which have got all the information about our current standing orders or direct debits. Okay, so from that list, we'll be comparing with the deductions as reflected by our bank statement to see if there is nothing fishy about those transactions. Okay, now let's talk of automated credit systems. All right, automated credit systems are useful methods of making and recording payments. They can save a business time. Automated credit systems operate the electronic transfer of funds between accounts within the bank system. This acts as an automated clearing system. When a business uses automated transfer, it sends information which will be input into the books of the business to the bank for processing. Many different businesses use automated credit system. Even small business can do so because their bank will help to organize the information. The most important advantage of the automated credit system is that it operates with very reduced amounts of paperwork. Usually these days, every bank has gone paperless, and most of the transactions, payment transactions, are now being done online. So this has saved many businesses from the cost of stationery, and very few people are now being employed, which has also reduced the wage bill. Although the side effects could have been the loss of jobs, okay, because many people have been turned redundant. Okay, they are now redundant. Now, large amounts of paperwork cause expense, delay, and can lack a great deal in the way of security. Automatic credit systems are used for processing any of the following: the standing orders, direct debits, salaries, wages, and some one-off payments. Okay, all these are now being done using the automated credit systems. All right, but in an exam, you may be asked, what is the difference between a standing order and a direct debit? Because usually these two confuse a lot of people. Okay, usually standing orders are for same amounts. Month after month, they are for same amounts. But when you are talking of direct debits, these ones are for varying amounts. So what's the deal about this? What's the big deal about this? All right, the big deal is that in standing orders, customer has more power. In other words, he needs to be consulted first for any change in the amount of deductions. Okay, let's say we are operating in an inflationary environment where the supplier might feel that, hey, a deduction of $100 is no longer palatable. There is need for us to increase your monthly payments to, say, $250. He cannot do that under an arrangement of standing order. But in a direct debit situation, supplier has power. Okay, the supplier has power. Why? Because he can just increase whatever monthly deduction he is getting from you. Okay, if he was deducting $200 from your account every month, because it is a direct debit, he can simply deduct 500 from nowhere, because the arrangement would give him more power. It would give him that power. All right, so that's the difference. When you're talking of standing orders, they just come with same amount every now and then, or we need again to sit down and talk about whether he should increase the deductions. But when it comes to direct debits, the supplier has got all the powers. The customer will have to kneel down and say, Mr. Supplier, can you please have mercy? Do not increase. He has to beg the supplier not to deduct more. That's the issue there. Now, how do we maintain the petty cash records? That's the issue. Okay, the main issue of contention. All right, because if you still remember, the books of original entry were discussed as we've got the purchases daybook, sales daybook, the journal. We talked of the cash book, the pad cash book. Okay. There are also the returns daybooks. All right, we talked of those ones. But for today, we talked about this guy. All right, but he has got his youngster, the petty cash book. They move hand in hand, but normally, when we do not want to mess up the cash book with insignificant transactions, with a lot of insignificant transactions, then we should have a petty cash book. Okay, so it is another form of a cash book, but for very small transactions. I mean, in terms of monetary value, they are actually small transactions. So, the purpose of petty cash. Petty cash is used to make small payments with notes and coins. We're not going to use the bank for these payments. We'll be using the notes and coins. All right, the notes and coins, the fiat, okay, fiat currency. That's what we'll be using. Okay. The cash must be kept safe in a locked box or tin, and its security is the responsibility of the petty cashier. It's not the responsibility of the manager, but the petty cashier herself or himself. Payments must be properly authorized, and all transactions should be supported by receipts and vouchers. They should always be receipts and vouchers. But you need to watch out for taxes and benefit contributions for casual labor, because some casual labor would just have to be paid from petty cash. When petty cash is used to pay for casual labor, such as the weekly cost of an office cleaner, the tax department will want to know that your organization could be liable to pay benefit contributions and tax for this person on top of paying cash wages. Payments out of petty cash for casual labor should therefore be sanctioned by an office manager, who should then take the necessary measures to satisfy tax department requirements. You would certainly need to keep details of the name and address of the person receiving the cash wage. Security and control of petty cash. All payments out of petty cash must be properly authorized and evidenced by a voucher signed by both the person receiving the payment and the person authorizing it. Please note that we do not expect to see the pet cashier's signature there on the voucher. All right. The voucher should be signed by the person receiving the payment, as well as the person authorizing the payment. These are the information, the signatures we would expect to see on the voucher. Okay, there was actually a past exam question on this aspect. The pet cash voucher, you see, does not mandate the cashier to put his signature there. Okay, because we already know that whatever petty cash amount is there within the company, it is his or her responsibility to look after that. As we have already pointed out here, that this should be the responsibility of the pet cashier to ensure that the cash is safe in right amount and in a locked box. All right, so whether they put their signature on the voucher or not, that's not our business. All right. Claims for payments must be supported by a receipt wherever possible. You can't just go to the pet cashier and say, I want a reimbursement, when you do not have the receipt for that expenditure you are claiming on. Okay, so you need to produce the receipt that you have incurred some expense. Okay, similarly, even if you were given the cash by the pet cashier, you can't just say, yes, I've used the money on postage stamps without the receipt from the post office. Now, looking after pet cash should be the responsibility of one individual, who might be called the pet cash officer or pet cashier, although a debit or stand-in will be required for the times when the pet cashier is absent. So which means that there should be some proper handover and takeover when the appropriate or the responsible pet cashier is absent. Before she leaves or before he leaves, he should ensure that they have done a proper handover, so that somebody will then have to be standing in. The pet cashier has to make sure that the cash is held in a safe place, a cash box or safe. So I don't expect you to actually panic when you are asked how do the pet cashier ensure that his cash is safe. Obviously, there should be some cash box or a safe. All right. Then he or she will make the actual payment of cash. He or she must ensure that all payments are properly authorized and are being made for valid reasons. Why are only small items paid for out of pet cash? Pet cash should not be used for large expenses such as office furniture, large restaurant bills, or aeroplane tickets because of security. A large amount of cash would be an obvious target for theft. An organization always tries to monitor and control its spending and to authorize all payments properly. It is not always easy to exercise a sufficient degree of control over pet cash, and the system of payments from pet cash for large items could easily lend itself to abuse, dishonest, and error. Okay, now let's talk of the practical situation where this pet cash authorization issue might be analyzed clearly. All right, on Wednesday at work, you receive the following request for reimbursement. The new office clerk presents bus tickets for amounts totaling $3.60 to support a request for payment for his first week's travel to work. Okay, the question is, before we read all the scenarios there, the question is saying that given a petty cash disbursement limit of $25 and authorization limit of $10 for miscellaneous expenses, for which of these items would you be able to provide authorization? Okay, which of the items would you be able to provide authorization for? Okay, so the first issue was the new office clerk presents bus tickets for amounts totaling 3 plus 60 to support a request for payment for his first week's travel to work. Yes, the amount is very legal, okay, but are you going to authorize for the payment of this according to your knowledge so far? Obviously, even if the amount is little, even if amount is legal, we can't authorize. We can't authorize because of the nature of the expense, okay? Because of the nature of the expense. The expense is not for the business. Yes, the worker was incurred that expenditure while traveling to work, okay, but it's a personal expenditure in the sense that the business does not take responsibility of it, okay. The business does not take responsibility for the worker's travel expenses to work. All right, those expenses should be borne by the individual. Okay, so the expense is not for the business. Now, what about part B? 10 new printer cartridges have been received costing $5.50. An invoice has been sent with the goods and a receipt will be issued on payment. In this case now, we are again not going to authorize the payment. Okay, we're not going to authorize this transaction for reimbursement because the expense, okay, the total expense here is, they're saying 10 by 550. 10 by $5.50 is equal to $55. This means that this amount is larger than the cash disbursement of $25, which applies to petty cash disbursements. Are we together? So this should not, it doesn't mean that the disbursement is not going to be done. The disbursement is going to be done, but not from petty cash, okay? But not from petty cash, but from the company's main bank account, the cash account. Okay, so it is going to be paid from the main bank account, not from the petty cash account or petty cash fund. What about situation C? The office caretaker asks for $5 to pay a gratuity to the refuse collectors as has been customary in previous years. Yes, in this case, even if the amount is legal, we are not going to authorize because this type of transaction is actually a rare, okay? The nature of the transaction, although the amount is very little, it requires the attention of managers, okay? Usually the administration managers, okay? So no receipt, okay, is likely to be given when we pay for the, I mean, when we pay for the gratuity to refuse collectors, there is risk that we're not going to receive a receipt. So in this case, such transactions require the office admin, the administration managers. Okay, so in this case, refer to admin manager. Admin manager, okay, admin manager or your supervisor, okay, for proper way forward. All right, because the contagious issue is there is no receipt, so such transactions should be authorized first before you proceed. Okay, so usually the appropriate office to refer such issues is usually the HR managers, okay, or the administration manager first, to have the authorization for such payments to be done. All right. Then lastly, a clerk says that the administration manager asked him to purchase coffee, tea, sugar for the office kitchen. The receipt shows a total of $15.40. All right, these are miscellaneous expenses. Okay, so we should be guided by the $10. Now, if the amount in this case has exceeded the limit, we need to refer back to the administration manager. So amount exceeded, refer to admin manager, administration manager for authority. So that's how it works, ladies and gentlemen, the issue of authorization. Now let us move straight to the issue of the imprest system. All right, the imprest system, in which there is a maximum amount of money in petty cash, which is also called the imprest amount. The imprest amount varies from one organization to another and might be enough to make petty cash payments for about 1 month. Sometimes other companies, they want to have just $200 a month as petty cash. Others might want it to go up to 1,000. Others might say more. Okay, it depends on the size of the company. All right. So how do we determine the imprest amount? Okay, the imprest amount is the cash in the box plus the total of vouchers. Okay, total of vouchers. Okay, which is equal to the top up amount. Okay, because in the exam you should be wary of this trick. All right, which one of the following is equal to the total of vouchers? The total of vouchers is the amount that is equal to the amount of top up, or the amount which should be replenished. Replenishment. This is the replenishment. Okay, the top up is the replenishment amount or replenishing amount. Okay, the amount we need to bring our petty cash back to the imprest amount. Okay, or to the maximum amount. Let's say the total petty cash for a particular company, okay, the authorized petty cash or the imprest amount is $200. If we have used expense of $60, we need to see vouchers explaining. We need to see vouchers, okay, explaining this amount, attached with receipts. Vouchers with receipts, okay, explaining the $60 which has been used up, and this $60 is the amount which we should top up to bring the amount back to $200. Okay, So the top up is not the imprest amount. Are we together? The top up is not the imprest amount. The imprest amount is the cash in the box plus the top up, which gives us the imprest amount. Okay, think that is that. The imprest amount continues. If a check is made on the imprest amount after money has been paid into petty cash in this way, then the following should apply. If a check is made on the imprest amount after money has been paid into petty cash in this way, then the following should apply. Noted coin in the petty cash books plus total value of IOUs. What are IOUs? IOUs are statements which there are some form of vouchers, but they are given a special name of IOU, where employees which are employed by the company, okay, might borrow money from the petty cash, but they should sign some IOU, okay, acknowledging that or stating that they owe money, they owe the petty cash some money, right? So they written by employees, acknowledging their petty cash debt, okay, because they'll be owing the petty cash account. All right, so that's it. Then plus total value of vouchers for payment out of petty cash, all right, less total value of vouchers for receipts of cash into petty cash. All this gives us the imprest amount. Okay, I think that is that. Okay, but we have been talking about vouchers. These vouchers. I think we need to know more about these vouchers. Petty cash vouchers. Whenever a payment is made out of petty cash, the petty cashier will produce a petty cash voucher. The receipt for the expense incurred will be attached to this voucher as part of the petty cash records. The petty cashier is responsible for keeping a record of all payments that are made out of petty cash. You can see that this petty cashier is somebody who should be a responsible individual. He takes charge of the cash itself to ensure that it is under lock and key. He also takes charge of whatever record that should be kept with regards to the petty cash. The initial record of payment is the petty cash voucher. A voucher must be prepared by the petty cashier whenever a payment is requested. Blank vouchers are purchased in pairs from stationery suppliers. Once completed, the receipt or receipts should be firmly attached to the voucher. When completed, a voucher should contain the following details. This is where I want you, ladies and gentlemen, to listen. This is the information we expect to see on the petty cash voucher. Details of the payment, the purpose for which the payment has been made, the amount paid, the name and signature of the person receiving cash, the authorizing signature of the person who has authorized the payment, the date of payment, the number of the voucher, okay, the number of the voucher, and the relevant receipts stapled to it. Have we seen the signature of the petty cashier here or their name? No. Okay, please watch out. Now, let's attempt this imprest system question. A petty cash imprest is $500. A spot check by auditors of the petty cash revealed cash in hand of $45. In addition, valid vouchers to the value of $395 were produced by the cashier. How much cash is missing? Alright, so we are told that there is an imprest amount, okay, imprest amount of $500. Alright, then a spot check by the auditors of the petty cash revealed cash in hand of $45. Alright, in addition, alright, so which means the petty cash cash in hand, alright, the cash in hand should be deducted because we want to determine the amount that is missing. We know that the authorized amount is $500 for this petty cash, right? But at hand or in hand we have got $45. So we have to determine where the other man has gone, all right? But we are told that in addition, valid vouchers to the value of $395 were produced. So the petty cashier has produced valid vouchers. So we have to deduct these valid vouchers, $395. Okay, so obviously the balance should be the amount which is missing. 500 minus 45 minus 395. Then obviously we should have a balance there. Let me just use my calculator. So $60 is missing. So this is the amount that is missing. So our answer should be A. Okay, done. Now you work at Bazooka Co. Bazooka company, and the company has a petty cash imprest of $750. This is to be increased to $800. At the end of the month, the cash in hand was $57 and receipts and vouchers totaled $673. In addition, the cash box contained an IOU from a member of staff for $20. How much cash is withdrawn from the bank to restore and increase the imprest? So we just have to start with the imprest amount. Original imprest was how much? The original was $750. Okay, but cash in hand, how much? And cash in hand was how much? So this was the original, this is the new, and at the end of the month cash in hand was 57. Yes, so there is 57 we have to deduct from the original impressed figure. Okay, and there is an IOU there. An IOU is something that should be considered. Okay, it should be considered as some cash available. Okay, it is actually cash at hand. It hasn't been used like any other business expenditure. It is not part of the cash that is to be topped up. Okay, it has got the same significance as the cash in hand. Let me just write it. An IOU has the same effect as cash in hand. It is actually money that is still in hand. It is to be paid back. It is to be topped up back to the imprest amount, not as an original or an ordinary top up, but the employee who has borrowed us money should return it into the cash box, not the company should take the money from the cash account or from its bank account to top up the imprest. No, it should be topped up by the employee himself. So it's like it is cash in hand. Okay, it's like cash in hand. So it is to be accounted for as cash in hand. Please don't be confused there. So the IOU was how much? $20. So the way we are treating cash in hand should also be the way we do an IOU. Okay. We also told, so this gives us the apparent expenditure, okay? The apparent expenditure so far. Expenditure, sorry, let me just try to erase this one. I'm not good at holding my pen. Expenditure. Okay, the apparent expenditure so far should be 750 minus 57 minus 20. Do we have calculator around? 750 minus 57 minus 20, that's 673. Okay, so 673. All right, and then we are then told that the float is to be increased. Okay, is to be increased. So increase in float from 750 to 800. That's an increase of how much? This is an increase of 50. All right. So this means that the amount that has to be reimbursed, okay, the amount that is to be reimbursed should be 673, all right, plus 50, which should be 723. All right, this is the amount to be reimbursed. Okay, that's the amount to be reimbursed. All right, so from this was the original float less cash in hand, less an IOU, because an IOU is like the cash in hand, and then we get the apparent expenditure. So this was the amount which has been used up, right? That's the amount which has been used up, all right, which can be supported, which should be supported by the vouchers. Then we are also told that the imprest is to be increased, so which means that this amount plus the increase should give us 723. So once again, our answer is A. Now let's talk a bit about accounting for petty cash. All right, so far we have been talking about what is going on in terms of the mathematical background. However, as accountants, we have to know how to account for the petty cash. All right, so there are two journal entries, okay, which is to be made with regards to petty cash. All right, we need a journal for the establishment of the petty cash fund and a journal to replenish the fund. We have been talking of the top up, but in the accounting sense, that should be a replenishment which should be done through the double entry bookkeeping system. All right, so let's start right away. We've got Maxco, which wants to start a petty cash fund for $1,000 on 1 January. Okay, so the journal entry that should be made should be 1 January. Okay, 1 January. All right. We have to debit pet cash. Okay, debit pet cash, because the pet cash account is receiving money. Okay, it is receiving how much? $1,000. All right, and we have to credit. The money is coming from the cash book. It's coming from the cash account, the main cash account of the business. So the cash book, the original cash book, okay, cash book is paying out. So this is why it is being credited. It's paying out. Petty cash is receiving. This is why we are debiting the petty cash but crediting the cash book. Are we together, ladies and gentlemen? Thank you. Let's move on. Now, continuing from the previous example, Mexico had the following petty cash transactions during the month of January. Okay, they bought postage, they bought supplies, they bought Friday pizza, they bought office tea. At the end of the month, the petty cash box had 860 of receipts. Okay, remember these are the receipts which are attached to the petty cash vouchers, and 140 cash. So cash in hand was 140. Now, create a journal to replenish the petty cash fund. How do you create a journal? So that we prepare a check for replenishment. So we come again to our journal record. Right? And remember, this is done at the end of the month. Okay, usually it is done at the end, but it can be done any day. When the petty cash is over, then we just have to pay back. Okay, but normally it is done at the end of the month. All right, because the petty cash expenses are usually predictable. All right, they are not things which are just random. Otherwise, they should be paid from the main cash account, because they would be things which are not normal to the business. All right, the petty cash is for small amounts which are usually normal to the business. They are predictable. They are known. Those expenses are actually known. Okay, so this is why the replenishment of petty cash is usually done at known intervals. All right, so let's assume that this was done at the end of the month, so 31 January. So the expense was, we have got postage expense. Oh, I'm sorry, I'm writing in the wrong line. Okay, fine. Let us just be a bit flexible, ladies and gentlemen. I'm sorry. I said I'm sorry. Okay, so we are saying 31 January. Okay, postage expense. Remember, an expense has got a debit balance. It is debited. Okay, so this is why we put a 240 there. All right. Supplies. Okay. Supplies expense. Okay. Supplies expense. This could be supplies for stationery and so forth. Those items which could be bought by petty cash. Right. So of supplies, 280. Okay, and we have got Friday pizza and office tea. All right. These ones we can call them miscellaneous. Okay, miscellaneous expenses. Miscellaneous expenses in total, that's 140 plus 200, that's 340. Okay, if you add them up, you should get that's 0, that's 12, 16. Okay, so that's 16, and then we've got 4, 7, 8, so that's 860, right? So obviously we are going to credit cash. Okay, crediting cash there, ladies and gentlemen, simply means that we are taking money from the cash book, okay, to the cash account. That's the amount we have to we have to write a check of 860 to replenish the paid cash fund. All right. Our expenses, our vouchers are supporting that 860 has been used up. All right. So because we've got receipts supporting them, so we just have to write a top up of 860 so that we bring our paid cash fund back to its imprest amount of $1,000. So that's what is happening here, ladies and gentlemen. What about when the records are showing this and the cash is showing that? What do we have to do? All right. Sometimes the records might be off. Okay, the paid cash itself might be off, or it might differ with our records. When this happens, we use a cash over or a cash over or short account. Okay, this might not be required in terms of the Acca syllabus. Okay, but it should be the information should be useful to those who are already in business or who are already employed, because by the end of the day, they need to know how to deal with the differences. So, because on the ground, such a thing might happen that your record is telling this one, but the situation on the ground is telling that one. So you need to know how you are going to proceed. So when the account has a debit balance, a debit cash over or short account balance, then it is an expense and it means a short. Okay, it means we would be in shortfall. All right, we'll be having a shortfall. Then when the account has a credit balance, it is a revenue and it means an over. All right, so what it means is when the account has a cash over or short credit balance, then it should be some revenue. Okay, it is a revenue. All right, so how do we understand this properly? Let us continue with our example of Mark's score. Now, Marco had the following paid cash. Continuing from the previous facts. Okay, Marco had the following paid cash transactions during the month of January. Okay, postage 240, supplies 280, Friday pizza 140, office 200. All right, you can see that these are the same figures we have been using so far. At the end of the month, the paid cash box had 860 of the receipts and $100 cash. Okay, you can just simply add these. You can see that the according to the vouchers, there is 860 used up, and if we separate 860 from 1000, which is the imprest amount, there should be the actual cash in hand should be 140. However, the cash in hand was 100. Alright, so let us create a journal to replenish the cash fund, the petty cash fund. Alright, so we say 31 January, we had postage expenses are debited. Okay, don't worry, 240, and then supplies expense, that's 280, miscellaneous expense, 340 in total. Okay, all right, but if we go back to our question, the cash that is available, all right, at the end of the month, the petty cash box had 860 of the receipts and $100 cash. This means that we need to replenish the petty cash by $900. Okay, 900 is required. Okay. Okay, so the cash available is $100. So the amount that is to be the amount of money that is to be written on the check, which is required to replenish the petty cash fund, is $900. So then have to say credit cash $900. But if we add up the debits, they are giving us 860. They are not equal to $900. So it means on this side we are having a shortage of 40. So we call this a short. Okay, or you can just simply say instead of writing a short, you can just write cash and over. I mean cash don't like this scribbling. Right, a cash over and short account. Okay, cash over and short account. Okay, which means if it is on the debit, as we have already indicated here, if it is on the debit, it means there is a short. Okay, if it is on the credit, then there is a revenue. All right, so here it means the cashier is to explain why the receipts are showing 860 and they are having only $100 in the pet cash box. Okay, they have to explain and justify that. All right, let's do another example. This is a journal to replenish pet cash account when there is also some difference. So if we continue from the previous example, we can see that the same facts are in existence, and the receipts are still 860, but we have got 200 cash. All right. If receipts are showing 860, it means that the amount of cash at hand should be 140. However, there is $200, which means there is a $60 more. There is $60 more or excess. So we said that excess would be treated as some revenue. Okay. All right. We just say 31 January postage as usual. Postage was 240. Supplies expense. These ones are expenses. Supplies expense was how much? 280. The miscellaneous expense, that's 340. Okay, and you can see that this one should be 80. So cash, we are crediting how much? We are just replenishing cash based on the amount of cash available. Here the amount of cash available is 200 out of 1000. Remember, our imprest amount is 1000, so the difference is the top up, which is the 800. So we are going to raise a check for $800. So you can see that the credits are 800, but the debits are 860. So automatically we need to add something to the credits. So we then have to say our cash over and short account should be on the credit, and this means that there is been some revenue. It means that there has been some excess, which should also be justified, okay, or should be investigated to see where we could have gone wrong. Maybe there was a miscomputation in terms of the expenses. All right, maybe the receipts are not showing the reality. All right, maybe there has been some discount which we were given actually in terms of cash, but on the receipts they were using the original figure. So such should be investigated and substantiated with evidence. Okay, I think we've done much there. Sometimes the issues might involve some sales tax issues, and we talked about the sales tax, where we say that if the purchases are for cash, then we have to worry about the sales tax. But if they are credit purchases, then whatever payment that is made should not have to consider or to worry about the sales tax component, because the sales tax would have been accounted for on the day of purchase in the purchases day book, right? So that this last example we need to worry about, where a pet cash purchase is made costing $79.20 inclusive of sales tax at 20%. Which of the following entries is correct? Okay, let's determine the sales tax amount in this transaction. Obviously, the sales tax amount should be 20 over 120 multiplied by 79.20. Okay, and this should give us a sales tax amount of $13.20. $13.20, and this means that, okay, this was the sales tax amount. Okay, we call it input sales tax because these are purchases, and on purchases we have got input tax. All right, so the the purchase itself, all right, a paid cash purchase is made costing. So usually the paid cash purchase is for expenses. So obviously the expense amount should be 79.20. Okay, 79.20 minus $13, $13.20. Okay, as we have computed above, then we should get the purchases amount of $66. Okay, after you do this, you then have to know, how do I do the double entry? Remember, I said that the expenses are debit, so debit expense, just have to debit expense, $66. Also, input tax is a debit. Okay, so debit sales tax, $13.20, and you then have to credit. The ultimate, because you are paying cash. Credit cash, $79.20. That's the entry that was required, and this is the correct entry, A. Okay, I think we've done a lot of issues. We've covered everything that was required. All right, so in summary, we then have to consider the following issues. Okay, then you have to consider the following issues, all right, which should guide us appropriately. All right, so paid cash, in summary, paid cash is for small payments with notes and coins. All right, and the cash itself must be kept in a locked box. A locked box or safe. Okay, or safe or tin. Whose responsibility is it? A responsibility is of the head cashier. And all the payments must be authorized. Supported by what? Supported by receipts and what? And vouchers. Okay? Please, this fact should not be overemphasized. Alright? Now, what about when there is no receipts in support? What should the paid cash do? In that case, okay, where no receipts are available, paid cashier to refer claim to his or her supervisor. Okay, he mustn't just do or decide things on his own. He just have to refer to the appropriate supervisors, to his supervisor actually. Okay, all right. The other thing, when the sales tax, in pet, on the sales tax in pet cash, notebook actually, expenditure is recorded, okay? When the sales tax in pet cash expenditure is recorded, all right, there must be a sales tax receipt as evidence of payment. Otherwise, companies would be duped by these pet cashiers, and an analysis column of sales tax in the petty cash book. All right. What happens when a new top-up has been received? A new page, okay, a new page in the pet cash book is started whenever new float, new is topped up. Whenever imprest float is topped up. Okay, now let us talk of the imprest formula or imprest template. Okay, cash in box. Total of vouchers, or when vouchers are added up, which means top up amount. This is the top up amount, okay, should lead us to the imprest amount. Cash in the box, add vouchers and IOUs. This should lead us to the imprest amount. Okay, I think there we have been had. All right. For more, ladies and gentlemen, I hope you could just continue. You can just get in touch with us, all right? And we are always going to be there for you, all right? For those who feel that there could be more information added, please feel free to just justify your assumptions through the comment section. Okay, just have to make a comment so that we improve as we go. All right, and those ones who feel they've been helped, please don't forget to subscribe or to like the video or share it to your friends and peers so that the Transfer Consulting Services Gospel is heard throughout the globe. All right, so I am your guy. I hope to see you in the next week's lecture, where we'll be talking about the bank reconciliation, because we have just hinted that this is a forthcoming lecture, but it is actually going to come. So please stay tuned to our next video, and I hope also that you are enjoying this current one. And as I have already emphasized and promised, we are going to continue improving in our processes to ensure that you guys are satisfied. All right, and to those who are studying with us, whenever you're facing any challenge, please don't hesitate to contact your tutor. He's always going to be there. There's always going to be a tutor on call any day, anytime, anyway. All right. Please stay blessed. May the good Lord continue to bless you. Thank you.